So this is week 27 of my TFSA portfolio, and this week I bought 4 different stocks. Well, actually 3 different stocks, but one of them I bought in 2 different transactions. So the first stock I bought on September 13th, and this is Shopify. So because I'm only depositing $200 every single week, I'm not able to buy an entire share. So instead, I'm buying fractional shares of Shopify. So let me just calculate how many or the amount of fractional shares that I bought, and I'll be back. So as you can see here, I spent $24.85 at $1,854.85 per share, which gives me this much of a share of Shopify that I bought. So I'll just copy that over. And then I also bought some more Shopify a couple days later on September 15th. So I just realized I did the previous one wrong, so I went to fix it up. I swapped the number of shares and the price per share. So now I have it correct, and I bought $14.88 worth of Shopify on September 15th for $1,860.55. Then I also made a purchase of Air Canada. I bought 1 share at a price point of $22.51. And then to cap off the week, I bought 1 share of HXQ on the 16th. So this past week, I didn't exactly spend all my money. I still had about $60 to $70 left in the account. And that's because I put some limit orders in and they didn't go through. One of those was on Well Health because it was dropping close to the $7 mark. My limit order over here was set to $7.19 and I wanted to buy 5 shares. However, that didn't trigger. So going over to the portfolio metrics, right now, my portfolio versus the index, I'm down by 1.6% or $120.85. And in total, since I started this portfolio, I am up 2.41%. Now jumping over to the total positions in this portfolio, you can see here there's a bit more red in the portfolio just because last week things didn't really go well in the market. Looking forwards to next week, I'll probably pick up more shares of DCM as it's now below $1, and I believe that management, or at least their CEO, has a strong vision for the company. He's very committed to the company, he's super excited for the future of the digital transformation, and he has a plan in place. So these are the things that I love to see from a CEO, and right now insiders aren't selling. Richard Cullum, who's the CEO, has a vast experience overseas as well as within Canada, and the reason why he got started in DCM is he was a consultant for them. So he worked maybe a couple months, 6 months or so, before deciding to sign on as a CEO. And when he consulted for them, he saw many different business problems that could be solved, and he saw this as a very interesting challenge, and that's why he ended up taking the role of CEO. He knew that there was a lot they could do with digital transformation, so they pushed from being a paper print first company to being a digital first company. And they're still undergoing that transformation. It's only been about 9 months or less than that because he started in March, so that's actually more like 6 months. Before we move on, this video is sponsored by The Peak. The Peak is a newsletter I enjoy reading every single morning as it really gives me a snapshot of what's happening in Canada as well as around the world. For those of you who read the Morning Brew, this format will look similar to you. However, there are Canadian focuses in this newsletter, which is why I love it better than the Morning Brew. They update Canadians on important events like the vote, what is happening in the polls, as well as some interesting news titles. On top of that, they do have some focus on Canadian companies, which the Morning Brew does not. For example, here they have some news on Enbridge, where Minnesota authorities slapped a $3.3 million fine on Alberta-based Enbridge for issues surrounding construction work on its Line 3 pipeline. So for Canadians who have a dividend portfolio and they invested in Enbridge, this might be an important article for you to catch up on to understand if Enbridge is the place that you want to continue keeping your money. From the sounds of it, a $3.3 million fine is nothing for a billion-dollar or multi-billion-dollar company like Enbridge. It takes me about 1 minute to read through every single story and 30 seconds to do a quick scan through if I want to continue reading. On top of that, they write it in a very fun and engaging way, and best of all, it's completely free. So if you want to sign up for The Peak today, check out the link down below, and you can get The Peak delivered to your email every single morning for the rest of your life. Now, for the rest of this video, I do want to focus on one stock in this portfolio though, and that stock is Shopify. You'll notice that I've been slowly building out my position in Shopify. Like this week, I bought $25 worth and like $15 worth, very small chunks at a time. And I'm just going to tell you my strategy straight up why I'm doing this. First of all, Shopify to me is basically like the Apple or Amazon or Google of Canada. It's got a product that their customers can't live without. And a lot of people actually depend solely on Shopify to sell goods. Yes, there are a lot of dropshippers out there and their businesses end up failing. However, there are also a lot of online stores with credible brands that have built up an audience and they have multi-million-dollar sales every single year. And these are the customers that I'm super excited about. And if you think about just today's landscape, a lot of people are sick of the big chain stores. Like, you don't want to go to the Gap for clothing or Old Navy unless you don't really care about what you wear, which is maybe a lot of people. However, there are a lot of people out there looking for something new. And this is where online brands like Shopify allow them to build up a business with very little capital and actually start a store online and market that way. It's a lot cheaper than setting up a store, renting out the place, and then setting up like physical inventory. So this is why I like Shopify a lot. And they have a good story behind the business, and they also have an ecosystem. If you want to check out Shopify, definitely check out their investor relations page. And I highly recommend you go through their latest earnings release as well as their presentation. So you can just flip through it right here, and it's super easy to read. Just the way that they do the design is something that also flows through to their product. A few things that I want to highlight about Shopify that I think you guys should know is going over to Yahoo Finance, looking at the total revenue and how it's grown over the past 4 years, as well as the gross profit. Looking at their total revenue, if we take their total revenue from 2020, about $2.9 million, and divide it by their 2017 revenue, which is about $700 million, or 0.7, we get a 4x increase, or 4.1x. Now doing the same thing with their gross profits, 1.5 mil divided by, or actually is 1.5 bill, divided by 380 million, we get 3.9. So the top line right now is growing faster than the gross profits. However, Shopify is not too concerned about their bottom line or their gross profits. They're more concerned about growing their top line revenue, and later on they can find better efficiencies or find different ways to make their business more efficient in order to increase their gross profit. But the fact that their gross profit is tracking alongside their total revenue, this is a good sign to see. On top of that, in 2020, the company cracked profitability. And if you look at the jump from 2019 to 2020, it's about a $3 jump in profitability. Now, a lot of people, when you look at Shopify's stock chart, you're a bit intimidated. Just like 5 or 6 years ago, the stock was trading at about $35. Since then, it's risen by about 5,100% to $1,800. But I think Shopify, although it has risen so much, they do have a lot of promise in the future in terms of their total addressable market and how they can increase their profits as a business. And looking at their market cap, they're only a $229 billion company. We know that it's very possible to reach a $2 trillion company because we have a few companies getting close to that or have already cracked that $2 trillion mark. Now, the way that society has really advanced technology and technology is helping to advance businesses, this is why companies are just being supercharged in the past few years. Because a lot of efficiencies get realized with technology, you can have a lot more capital output per employee. So I would not be surprised if Shopify one day hits a $1 trillion market cap. And if we look back from that day, one day in the future, you would have realized a 4x on your investment. However, of course, nothing is guaranteed in life. I'm just looking at the facts behind Shopify and the story behind it. And I have a belief that this company is able to continue to grow and capture more customers because they've already proven that they can do so in the past. There could be acts of God that happen that do take out Shopify, and maybe there's some short-term tribulations with Shopify's stock price because there's people who are advocating against Shopify. But that happens to a lot of companies out there. But those companies who have a sticky product and have good fundamentals to their business are the ones that are always going to win. So that's my story with why I'm buying Shopify. And although that I'm down right now in this position by about 1.68%, it's a relatively small position in my portfolio, right now sitting at $137.11. The reason why I'm buying so little into Shopify every single time is, again, the stock chart. Right now we're at all-time highs, and we can see that Shopify has been on a bit of a tear since June 2021. It's reached new all-time highs. There could be corrections in the market, and that's why I'm not investing heavily into Shopify right now, because it is expensive, and I think that we could get better prices down the road. But nonetheless, I'm dollar cost averaging in and trying not to just play the market and hope for lower prices, because those may never come, as people who invested back here or waited to invest have realized that. Now, if you're looking to invest short-term into Shopify, then I wouldn't recommend you buying right now. Probably you want to wait for a dip sometime in the future. Right now, there's a lot more risk versus reward. But if you're investing long-term, personally, I see there is a lot more reward in the future versus the risk. Anyways, that's all I have for today's video. It's a bit of a short one, and elections happened yesterday, so that's why I'm releasing this video on Tuesday. Hope you guys enjoyed it. If you guys enjoy the transparency of my investing and showing you every single week, and although I'm down in this portfolio sometimes showing you that, then remember to leave a like down below, as well as subscribe if you haven't done so. If you have never invested in your entire life and want to know the best platform to invest on, I've done a review on Wealthsimple Trade and you can check that out.